Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space and also the markets. So that's exactly what we're going to be doing in this video. We're going to kick things off by looking at really the driver behind Bitcoin right now, and it's sort of rather erratic, but at the same time lackluster price action. And we're going to be talking about Bitcoin. Bitcoin's still in a bit of a danger zone. You know, we really want to see 2850, so 28,500 cleared. Otherwise, there's this risk of this kind of head and shoulders that could take us to the downside, which would mean we'd have a deeper C wave. And then we're going to, once we've looked at what's moving the market, we've talked about Bitcoin's price. We'll talk about markets quite broadly. We'll talk about money markets right now and an issue that the risk markets are suffering with, and that's that you can get a really good return for no risk to the tune of 5% in money market funds, which we need to see a swinging back off. So I will be elaborating on that a little bit. Then we're going to get into some news. We're going to be looking at banking giant Citi, who are looking to transform customer deposits into digital tokens that can be sent instantly anywhere in the world. Ladies and gents, we have day in, day out kept the foot on the gas despite the bleak sort of sentiment in crypto, in the fact that we know that everything is going to get transformed by this technology, and you get to be the early adopter of that. And that's one thing that we are really prominent with on this channel. Then we'll be looking at the Bank of England. Of course, the SEC were denied access to Binance's software, which is another win for crypto against the SEC. And then we'll talk about obviously what's coming up on Wednesday, which is tomorrow, which of course is the CPI. Sorry, not the CPI. We had the CPI last week. The FOMC Fed rate decision. It's looking very likely that they're not going to uprate. So let's kick things off. Right now, the market is very much getting moved. And if you just bear with me 1 second, guys, I'll just get my screen, which I should have done before I started the recording, back to a normal size. The market is very much getting moved by likely leveraged longs and then shorts, basically. So this is yesterday. Open interest surged by $1 billion, then nuked by 700 million. And actually, if you come and look at the short-term price action for Bitcoin, you can see that reflected in the price. You had open interest that opened and then it closed. Probably, we could even say to the tune of maybe, 70-ish%, using a fib there. And now you're likely going to see an opening of it. So Bitcoin's in a very interesting place right now. You know, we've kind of expressed a little bit of short-term uncertainty really from here. We said, okay, could go down, could go up, very low volatility, you're going to get a big move. We got that kind of spill that I think was largely caused by a real lack of interest in the crypto space. You've got record low volume on exchanges, and you've got record low interest in terms of Google searches, certainly for the past, nearly 5 years or so. However, we've stated, and just like with Ethereum, we said we like this short-term structure for at least short-term upside. The question is does this short-term upside fail to get above 28,500, hit its head, come back down, and give us that pronounced head and shoulders that then we'd be looking to take it to the downside with a target of, do it very quickly for you, around about, I think, 20 to 18,000. And then that would be your deeper after a 5-wave impulse. Where are we? A, B, into a C. We're not Elliott wave traders, but we do see it as a prominent thing. The market often moves in threes, but we'll see what happens. Right now, Bitcoin looks quite strong. Some of our altcoins are doing absolutely spectacularly. If you want to find out what we're buying and where we're buying it, please do consider becoming a Patreon. You'll get my full portfolio list. The dollar is continuing to be strong, but expected to be a bit of a tough area for it to get through. And that could coincide with a brighter days for Bitcoin and stocks coming from risk off. We have higher targets for the stock market. We're calling new all-time highs on stocks, and we have done since the start of the year, despite the bearish sentiment. The stock market, I think, is actually doing quite well. And I want to talk about something that's going on with the markets right now, right? So the average return for the S&P is around about 9%. Okay? And there's risk that comes with that. right now, because of interest rates, you can put your money into a market fund, or a sort of a money fund, and you can get 5% return with no risk. So you can get over half, and it may, depending on what the yields do, go even higher in regards to an average return for the S&P from just having your money sat in cash and in a bank. And at a time when inflation's down at 3, it kind of makes a little bit of sense to do that. So that's an issue that I think all markets are suffering from, because we've got this concept of TINA. There's a genuine alternative to the stock market right now, and we need to see that swing back. And actually, the really interesting thing for me that's going to come out of Wednesday is going to be the dot plot, which is going to sort of show where they're looking at for rates, where they're looking at cutting. And it's going to be interesting to see if they are actually now still looking at cutting to the tune of 4 cuts in 2024. So that's kind of something more broadly going on. That will swing back. You guys know that we are really long and strong on the market. If we look at altcoins, and I think this is, and I'm going to blow my own trumpet here, guys. I think when you look back and you've done another one of these and it's bounced off of this area, we can say that this was a great call. And everyone that's sort of a sub watcher of the channel hopefully has caught that journey and is along for the ride. Next thing I want to go on to is, of course, yesterday we had news from banking giant Citi, transformed customer deposits into digital tokens that can be sent instantly anywhere in the world. So every single financial instrument that exists in the form of, in this example, it's customer deposits. In other examples, it's bonds. The equity market is all going to be transformed and digitalized. And you want to invest in the crypto that's going to play a role in doing that. Now, Citi are creating their own, but there's going to be a need for interoperability with that and a messaging service. So that's why we look at things like Chainlink and Quant and these other really interesting blockchains that we highlight on a daily basis. We did a great write-up on Hedera Hashgraph yesterday for anybody that's interested, and their partnership with ABRDM, which is the largest fund manager in the UK. Very interesting. Moving on, the Bank of England Deputy Governor says impairments rising among UK lenders. In a bid to tame runaway inflation, the central bank hikes its main interest rate from 0.1 in December 2021 to 5.25 presently, and the markets expect another hike. Yeah, so when have we got that other hike? Is that on? I've got a feeling it's on Thursday. So tomorrow we've got the Fed hike. And then I believe, yes, on Thursday we've got the Great British. We've got the Great British. We've got the Bank of England hike. So Bailey and his cronies will be hiking, and you are going to have issues that come as a result of rates, but they don't. There's a lagged effect with it, and this is where we get our entire thesis that actually markets will do very well into a crash, which ties in with the factoid that actually the S&P rallies within 2% of 2 months to a recession. It only starts to start pricing in recession 2 months pre, and it will rally up until that point. So we think we've got things figured out, and we could be totally wrong, of course, and you've got to be radically open-minded when it comes to these things. But so far, so good. We'll see what happens. We don't expect a demand-destructive event just yet. Moving on to a little bit of SEC news. I was going to say S&P news. SEC sees temporary setback in requests to access Binance.US software. A federal administrative judge has denied the Securities and Exchange Commission request to gain imminent access to Binance.US's software, asking the regulator to provide more specific requests for discovery. Are there any comments? No, there's not. So judge, I'm not going to try and say that second name, guys. Do forgive me. Decides to deny the SEC's imminent access to Binance.US's software and other documentations, in particular setback for regulator in its ongoing case against the exchange. The custody of Binance.US customers' assets is one of the central concerns that the SEC has with the crypto exchange, with regulators claiming that Binance.US must be investigated more thoroughly to tease out potential links to the global arms of the exchange. So we like CZ. We've copped a lot of flack for it. I think you've just got a lot of haters on Twitter. You've got a lot of people who got a lot of time on their hands and that probably still haven't bought crypto yet, would like it a lot cheaper. And they know that actually if Binance went under, that would cause FTX would look like a flash in the frying pan. Certainly at this stage of the market with where things are at and just how big Binance actually is, it would clear the road for institutional players, which is something that I'm always very mindful of. But we like CZ and we don't actually think that Binance is particularly going to go under. But that's not a guarantee. And I always think the best practice for crypto is to self-custody it. We also did a write-up over at Allincrypto on the 5 best self-custody wallets. And yeah, I think that's really all we got for you guys. It's gone on for 10 minutes now. So tomorrow, of course, you've got the rate decision. I think, and we'll pull it up for you, that it's very likely that they're not actually going to do a rate hike. But I do and am leaning more towards the idea that they do one perhaps in November and they just give markets a little bit of a break. We're going to watch the yields, blah, 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 blah. It's pretty obvious they're not going to hike in this one. We had that mega spike for the 2 years yesterday and it's still going up. I mean, sorry, this is the 10-year. You know, I mean, this is the largest market in the world moving like a shitcoin. Cause for concern, maybe. Who knows? So we'll see. We'll keep you all informed. On that note, we are going to love and leave you. Stay tuned. This week we're interviewing 2 very bright individuals about the crypto space, one about data and one about Hedera, and of course their own project. So do stay tuned for those. Make sure you check out the website. Come follow me over on Twitter. A like and a comment is always appreciated. And if you're not already a subscriber, please do consider becoming one. On that note, I'm going to love and leave you. Have a great day, guys. See you in the next.